is Larry Werther. He is the chief U.S. economist for Daiwa Capital Markets America. Welcome to the show.
Ashley, I'm pleased to be here. Thanks for having me.
Awesome. So next Wednesday, we have this highly anticipated September Fed meeting. What do you think is going to happen there?
Sure. I'm in line with the broad consensus that the Federal Open Market Committee is going to cut rates by 25 basis points. We saw no surprises in the inflation data, and I think the labor market has softened up enough that action is likely from the committee.
All right, and the Fed is also going to meet on, later on in the year. What do you expect to happen moving forward?
Sure. Given the softening that we've seen in the labor market, I certainly think that the views of officials have evolved. My expectation currently is that they'll cut sequentially into year end. That would be at the meeting next week, and then in late October, and finally at the end of the year. They'd like to get closer to neutral, ideally by year end.
And how do rate cuts affect the economy, investors?
Sure. Well, rate cuts, the federal funds rate, as you know, is not the mechanism necessarily of boosting the economy, but that rate will diffuse through the economy. It'll lower borrowing costs for consumers and businesses. And I think also the symbolic or the signal value of it to businesses that the central bank has their back will give a boost as well. So lower borrowing costs and hurdle rates for new projects, and also a shift in stance where businesses can be more confident going forward that it'll be easier to finance projects.
And there are definitely people who have different opinions on it. What are some of the pros and the cons of a rate cut, in your opinion?
Sure. So certainly first the cons. Obviously, we're not back to 2% inflation. There's still the tariff issue that's hanging over the market. My view is that tariffs won't give as much of a boost to inflation as I think people were scared about earlier, but it's still very much a wait-and-see process. And certainly with tariffs now getting kicked to the courts as well, probably the Supreme Court, there's still a lot of uncertainty there, which I would add markets and businesses also don't like. On the plus side, though, I think it will provide a tailwind to the labor market into year-end. Firms, as the Fed starts to ease, will be more confident perhaps in adding new positions again. So you should get a little bit of a thaw there, which should have also knock-on effects through the broader economy.
And given recent inflation data that's come out, these jobs numbers, we were at 263,000 jobless claims. What do you think is in store for the rest of the year in terms of economic growth?
Sure. I would say first, I don't think we're necessarily at the precipice of a recession, but below potential growth is in the offing. Right now, I have penciled in GDP growth in the area of 1.3%. I think you've seen enough canceled projects by businesses, enough slowing in the labor market to suggest that aggregate demand has eased. So I would say a one handle there, but still, again, I'm not on recession watch necessarily yet.
All right, and I understand that you believe that tariff-related pressure can peak in Q4. Mm-hmm. Why is that, and how do you think it can affect inflation?
Sure. My view here, which aligns with views expressed, for instance, by Chris Waller at the Fed, is that tariffs are oftentimes responsible for a one-time price level increase. And I think that, in concert with softening demand in the economy, suggests that firms will be willing to eat some of the higher costs that they're now seeing. So you'll probably get maybe 40 to 50% of the costs ultimately passed through to the consumer. And then once firms internalize these, remember, inflation is a rate of change. And once you achieve that new base level, 15 or 18%, whatever the prevailing tariff rate is, then you have other things to focus on with inflation. So again, I think it'll work through on a one-time basis. And my expectation is that policy will be set by the end of the year, and most of the price changes will pass through by then.
I know you mentioned firms might be absorbing some of the cost of the tariffs. Do you think it's going to be passed on to the consumer?
As I said, I think some will. I think we're seeing a lot of stories right now in the financial press where firms like your Walmarts, your Targets, your big box retailers want to maintain foot traffic in an environment where we have seen some slowing in demand. So I think ultimately there will be some pass-through. We've seen indications by your CFOs and your CEOs that some will be passed through. But I would also add that I think firms will absorb some of it in margins, which recall are elevated coming out of COVID. So there'll be a little bit of give and take on the parts of firms to maintain foot traffic.
What should investors know when it comes to fixed income, and what do you think we'll see in this area before the end of the year?
So fixed income, I think there are two competing concerns right now, specifically with the back end of the curve. In one sense, you have profligate spending by the federal government. You have debt likely to hit 170% of GDP by 2050. So all of these things are negative for the back end of the curve. That being said, though, with signals we're seeing from the Fed and with, I think, a near-term focus on risks, certainly with the 10-year is back to 4%. I think right now you always have to watch for further curve steepening, but thinking 2s, 10s in the vicinity of 50 basis points is a good ballpark. And for me, I think the prevailing level of rates will be at least lower for a time as investors pick through, the prospect of further Fed cuts into next year.
All right, and we have like 30 seconds left. Any other economic storylines that are maybe under the radar that you have your eye on?
I would say very much the resilience of the consumer or the lack thereof. The consumer is the backbone of the U.S. economy. We've seen some warning signs like a spike in delinquencies with respect to student loans. And so I think they're really the story to watch, and we'll get some insight with that with the consumer sentiment numbers coming out a little later today. So I'll be watching those closely.
Thank you so much, Larry Werther, Chief U.S. Economist for Daiwa Capital Markets America. Thank you so much for joining us and for your expertise.
Ashley, thank you again as well.